Did you see the Bill Gross comment? Tesla's a meme stock.
No, I didn't. You want to pin it up here?
Sure. Elon responded to it too, so it got a little.
Oh, drama. A little drama.
We love that.
Wes, how are you?
Calvin, I'm doing really well.
I'm doing well too. What's new with you?
It's been a big week for me. I retired technically about 4 years ago, but I haven't been able to announce it until this week. And Tesla's been a part of that, so that's been fun. I'm a long-term buy and hold guy, if you will, and it's just kind of exciting because now after this announcement, I'm kind of free to go do stuff, do some traveling and things like that. So I'm excited about the second half of the year.
Nice. Why couldn't announce it before?
I started a company about 20 years ago, and I chose in 2020. I decided to retire, but I had to and I got to be careful. I don't want to say too much. It's a very competitive business that I've been in, but the best strategy at the time was to kind of wind things down. But I didn't, with employees and various people like that. I couldn't say that, if that makes sense.
He's definitely a hitman.
Are you a hitman?
What's up, man? No.
Do you work for the CIA?
Not anymore. I'm just playing. Hey, I am curious, Uzi, what Elon said as a reply.
I put it in the comments. I don't know how to pin something up here.
Yeah, I mean that's not the tweet I'm looking for, though, Uzi. That's just a Sawyer's post.
What were you looking for? I got the comment.
Did you say he tweeted?
Responded to the tweet in the comment. It's in the photo.
Okay. About Tesla, how are you?
Hi, Yaman. How are you doing?
I'm doing well. Doing well. How is the rollout going?
Pretty good, pretty good. I mean, it's big wave went out yesterday, so that's great news. I just got it on my car, so I'm actually driving right now, testing it out with 12.4.3. Really happy with it so far.
What % of the eligible fleet today has 12.4?
By my count, it's close to 10% of eligible cars. So I count only US and Canada, and only those that are on the 2024.14 branch or below. So that's about 9 something, close to 10%. So that's a pretty big rollout, wave compared to what we had before. Before we had like 4%.
And you think it's going to continue throughout the week?
I hope so. I mean, it looks pretty good to me. I'm pretty excited. Had a quick ride last night, and I'm driving right now. Actually, just stopped for a moment, but we'll continue for another half hour or so during the lunch break.
About Tesla, can you estimate how many cars use it every day? Once a day, and then once a week, and then once a month at least?
No, unfortunately, we don't have the visibility into that, so we can only estimate the number of cars that have the version installed, but there is no information available to anyone, I guess, to tell exactly how many cars are actually have it activated or or subscribed to. So that would be difficult to estimate.
Yeah, I think daily. I mean, estimate, obviously. I'm not asking you to kind of like know it. I don't think anyone knows other than Tesla. But I would guesstimate maybe 100,000 daily, 200,000 weekly, and 300,000-400,000 monthly. Omar, what do you think?
Yeah, there's obviously no way to know the usage data. I would assume that basic autopilot usage, the free basic autopilot that comes with the car, is probably on the order of 5 to 6 million users out of a fleet of about 6.2 to 6.5. So basic autopilot, I believe, has very high penetration. I've met very few Tesla drivers who don't at least use basic autopilot. Now for FSD, the last quoted user figure they gave us was 400,000. I assume it's grown slightly since then. Let's call it maybe 500,000, be a little generous. And I would expect out of those probably 3 to 400,000 probably use it regularly.
Three to 400,000 use it regularly, meaning like, I mean, regularity can mean many different things. Do you mean weekly, monthly, or daily?
I would just consider regularly to mean pretty much every drive. They use it for at least part of the drive.
Gotcha. Okay. All right. Well, I pinned at the top of our screens 3 questions. If you'd like to respond to them, you may. That helps support the space and also gives me visibility into what people are thinking. I think there's a false narrative out there that, you know, Tesla bulls are this and that, but I think it's a very diverse group. So it encourages, like I encourage people to reply to those with your own perspective on those things. Uzi, what do you think?
Well, I just wanted to also mention my propaganda at my house has weared off, and I might have convinced my mom to not get a Porsche, get a Tesla, because she suggested it to me today. So we might have another VIN to add to it, but I will let you guys know if anything. She's like, oh, I have to look on the website. So if anyone can help me with giving good instructions to her, that might be useful too. For the Robotaxis, we have our bet 2026. So I'm sticking to that. Q2.
Yeah, very unlikely. What gives you so much constant confidence?
Well, before our space yesterday, you shared like the rule of tens, but my philosophy is the way that FSD is ramping up isn't, and I also Homar's blog, his mentioned that it was somewhat human-like. My own personal experience with my own drive, and it from a friend. And then the manufacturing side, I think will ramp up, but we'll only know 8.8, right?
Do you think we will know 8.8?
I think we'll get the CyberCab reveal and the app. That's probably what we'll get, and then some rough timeline. But then he'll downplay it, saying, "Oh, I'm awful with timelines."
Yeah, I don't think we're going to know much on 8.8 other than the hardware unveil and maybe some more details around the business model. But production ramp, you know, that's really what matters, right? It's going to be a while. Omar, did you see Bill Gross's tweet that Uzi was just talking about?
Yeah, I did. And I saw Elon's response as well.
What did Elon say?
Well, he basically said he's looking in the rearview mirror. That works great for bonds. He doesn't understand technology and looking forward at earnings potential in the future.
Alexander, how are you? Yeah, Omar, go ahead.
Yeah, I mean, you hear a lot of this from bears. They're saying, look, this is irrational. This is a meme stock. I mean, the amount of sort of hatred and sort of equating this to GameStop or some stock that has, no fundamentals that are improving, I think is obviously sort of underplaying the extremely difficult nature of the tech achievements they're pulling off. And I think a lot of people who don't understand the technology and don't understand how groundbreaking it is can say, okay, this is just a meme. But I think the market is really waking up to something that is a real earnings story that's likely to play out. And I find that people are asking the wrong questions, whether they're bulls or whether they're bears. It's not about when is Robotaxi coming. It's not about interventions per mile necessarily. It's just about Tesla being sort of differentiated as a product, majorly differentiated from everything else on the market. Something that can help you drive this well today and is going to continue improving until it's autonomous. I mean, don't look at the robotaxi business at all. Forget them taking a cut out of robotaxi rides. Let's assume that never exists. Now, if you want to assume that the present value of FSD revenue on a car is, let's call it $8,000, because they could either, buy the purchase price or buy the subscription. And, let's say they subscribe for 80 months or the price goes up or whatever over the life of the car, it ends up being around 8,000. And you multiply that out by the fleet and you look at the TAM, it's, something like $50 billion. Put a multiple on that of, let's say 20, discount it back. And there's a large part of the valuation that is just sort of assuming people will never take the software up. Now, if that ends up not being the case and people do start taking it up in the United States and China and in Asia, assuming it can launch in those jurisdictions, then that's meaningful, even if they never achieve autonomy. And I'm not counting the energy business, the auto business, sales increasing for the auto business as well. So just simply as an ADAS product, there is a materiality to what we're seeing happen here, as well as what's happening in the energy business and improving fundamentals in the auto business. You are, for the first time, seeing people have a reason to actually subscribe to FSD. And the reason is to turn off the nag. So for the first time, you people don't say, basic autopilot for free already does the job. For the first time, that $99 or $8,000 upgrade actually gets you something. And I think the people who are calling this a meme stock haven't quite absorbed that yet.
Well, I pinned Bill Gross's quote at the top. This is from the CNBC article that Uzi linked below the space. Bill Gross says, according to the article, longtime investor Bill Gross believes Elon Musk's Tesla is behaving like a speculative play among retail investors. Quote, Tesla acting like a meme stock, sagging fundamentals, straight up price action, end quote. The former CIO and co-founder of PIMCO said in a post Tuesday afternoon on X. Quote, but then there seems to be a new meme stock every other day now. Most are pump and dump, end quote. Uzi.
I think you sort of explained my point right there. He's just looking at the chart. He's not looking at the business or what it might be. And I can understand right now the ramp up is somewhat insane and I'm scratching my head. But on the other hand, when you have a business that actually has fundamentals behind it, like the sagging fundamentals part makes no sense to me. And then it's also a Reuters article that was reported by CNBC, or Reuters reporter at least. So if you look down in the article too, he says he dabbled in GME and AMC in 2022 with options. So he's just looking to make money. And if he was smart, he'd be buying Tesla. So yeah, he's a great investor though, with bonds at least.
Yeah, obviously the definition of great investor changes, and but Elon says Bill Gross is used to making investment decisions. I'll pin this at the top too. Bill Gross is used to making investment decisions by looking in the rear view mirror, which is fine for bonds, but he does not understand technology as that requires looking through the front windscreen. I don't know if do we have any bond investors in the field, in this space? If there are, please come up to request to speak. If you're experienced in investing bonds, because I don't think bond investors necessarily just look backwards. I don't know.
Well, obviously,
What?
you want to predict what bond prices are going to be in the future.
Yeah, I mean, there's a lot of forward-looking analysis involved in bonds as well as stocks, and yeah, Wessex.
Yeah, I was having some technical difficulty. I had to drop down and hop back up.
Okay, Edward.
Hey, how are you doing, Yaman? I'm just in my car. FSD just drove me my normal daily trip to and from the house and no interventions. That's kind of standard over the last couple months. I've literally never had an intervention in 2 months on that same trip. Granted, it's the same trip I take all the time, but it's pretty amazing stuff.
Yeah, by the way, I posted, Omar just dropped off. I think, there he is. I posted the screenshot of his quote and I tagged him on it. Bill Gross is on Twitter. So, if you want to say anything to him, you can reply to that tweet. Omar, did you have your hand up?
No, I just couldn't hear Edward, but I was just going to comment also that this is a pretty widespread sentiment that you're hearing from Bill Gross. You can hear the frustration in the voice of Grant and Motorhead and other Tesla bears. And it's a fairly, I think, prevalent sentiment in the finance world. There's a lot of Tesla bears who try and sort of make this sort of argument in financial circles and FinTwit often that, okay, this is just sort of a meme stock. And this is part of why you're seeing short interest rising. There are a lot of people who are going to sort of fight this rally, say this is just completely backwards. There's no fundamentals behind this, ignoring all the things that are happening in the business, like, for example, the coming quarter being a beat, the Cybercab event, FSD rolling out, etc. The layoffs they did, which should improve OPEX and potentially even COGS, the working capital improvements, and they're going to get hit when they start to realize that this wasn't just sort of a meme stock moment. There was actually some there, and they will have to fold their positions, and it will just exacerbate the situation.
Uzi?
I'm not a bond investor. It's before my time, but what it does strike me is that bond investing is top down, and it's somewhat it's the inverse of what we're looking at.
That's not true. How much bond experience do you have? How much bond investing experience do you have? That's not true at all.
I have little. I have a money market fund.
Okay. So
Wait,
then
why
don't
did
talk
you
about
say
don't
bond?
talk
Why
don't
did you
talk
say
about
bond
something
investing was before your time? What does that mean?
Because I have like just a money market fund.
Yeah, we're moving on. Alexander.
Hello, guys. How are you?
Magic.
Hey, yeah, just looking at that article that you guys have pinned. Yeah, so Bill Gross is the bond king of the last 40 years. Very sophisticated investor. Also sees the same thing. So let's just add it to the list, right? Let's add it to the list of investors. Let's say David Einhorn, Michael Burry, Jim Chanos, and now Bill Gross. But you guys are listening to Omar, who has no investment track record. So I think that, should be pretty safe.
Well, actually, we've been listening to Jim Chanos and David Einhorn and all those guys way back since 2018, and they've been wrong the whole time. Actually, Chanos even had to shut down his fund. So we've been listening to them, and we've been keeping score.
Investing is a big game of poker because you win a few hands doesn't mean you win the whole thing. You're betting against professionals, okay? You do not. This is a professional thing. And again, everybody here, you're listening to Omar that has zero doesn't manage. Nobody would let this guy manage $5 of his money. Nobody, okay? This is what we call a tourist. He doesn't know what he's talking about.
Don't make it personal.
Money?
Don't make it personal. Samir.
Hey, good afternoon, everyone. Did anyone, is not Tesla related, but did anyone see Elon's tweet about live stream on Neuralink. Do we know what's that about?
I don't know. How are we supposed to know? All we have
That
is this
sounds like a
tweet.
scam. That's not really Elon.
In a couple of minutes, Neuralink is going to do a live stream of a live demo. Elon just tweeted.
Oh, okay, never mind then.
I think. I don't know. A couple of people tagged me on it, but I don't know what's going on. Magic, are you still? Actually, hold on 1 second. Machine.
You know, people should listen to people's arguments, not their status or what they did before. People looked at Janos and said, "Oh, this guy, he was successful shorting Enron, therefore he must be right on Tesla." But if you listen to his arguments at the time, they were very weak. They were just basically, Tesla's losing money, so they're going to keep losing money, and other companies are going to come in. So total lack of knowledge of the actual situation. So it was easy to not trust them, or David Einhorn at the time. But now the situation's changed, and the arguments for bulls are they're not talking about valuation anymore. They're just, look, margins are bottoming out. We're cutting prices and layoffs, and so therefore stock should be valued whatever I think. That's what I hear. And shorts at the same time, no one has good arguments. I hear no good arguments anymore. Everyone just talks about the stock should go up or down. They don't actually give any valuation anymore.
Why? First of all, what is going on with you and Magic today, where you guys are such blankets? Nobody, everybody, never, always. These words and phrases don't belong in this space. This is a very diverse space. Okay, I think people should machine. Hardware 4 is more nuanced than your brain. Go ahead.
Well, it probably does have more compute power than my brain, especially after listening to space for 5 minutes. My compute power went down significantly.
All right, Bob down.
I mean, if anybody holding short position on Tesla, you can buy shares to hedge your short. So don't be angry. If you believe what you're doing, I guess you're gonna get your money back. But just in case, you can hedge to buy Tesla shares.
Okay.
Thank you.
Are you giving investment advice now? Hustletown, Texas says, only, Machine, this is for you. Only the Sith speak in absolutes. We're six.
Yeah, hey, Omar, have you heard anything about Tesla offering a replacement for one of the motors on the Cybertruck?
Yeah, I saw a tweet from Kyle Connor about it, but I haven't heard anything beyond that. And by the way, I think I probably manage more money than Magic.
That you do.
Machine.
Yeah, everyone's going into these personal insults. I just think it's useless. I just want to know why people think a company should be valued at a certain price based on, near-term earnings, or what is their expectation. And I think what's totally changed versus years prior, the shorts were just really, they had dumb statements about oh, the company is not making money, totally missing the volume ramp. And now the situation's changed, and really the position that really shook me from a long-term investor standpoint was when even Rob Maurer said, deliveries don't matter, automotive doesn't matter anymore, it's just FSD. And while that's true long-term, it's very just sort of glossing over critical elements about
When did he say that?
He said that 3 months ago. And I was like, are you kidding me? You are not a VC. Okay, everyone here now all of a sudden thinks they're VCs investing in startups and valuing them based on their 10-year outreturn.
Can I ask you a question?
What's your question?
You sound like you added to your short position today. Did you add to your short position?
No, I did not.
Be honest.
No, I haven't had anything. What did I do today?
Is this the short and distort machine?
No, I don't distort. That's what I'm saying. I'm being very clear. No, I shorted a little bit of Carvana. Yeah, I shorted a little bit of Carvana today. That's the only thing I added.
Okay. Bull? Bull 2035? Omar?
Yeah, machine. I think there is really something material that's changed in the business. And it's really the probability or the expected revenue and earnings from FSD as an ADAS service. I expect in the next couple of years, they have a revenue opportunity of up to 10 to $50 billion, expanding by about $17 billion a year, assuming production of 2 million units of auto a year. So when you really look at that and energy, I think this is a $1 trillion company. The market's starting to realize it. It was kind of an anomaly that it was ever priced below 200. Looking at the auto business and taking the kind of bear's interpretation of this declining auto business is how it should be valued on, I don't think is really going to hold long term, especially as the Fed starts to bring down rates. So I think this is probably a $300 stock before the end of the year.
Machine and then magic.
I would love to know where you get your numbers for how much profit FSD ADAS is going to bring in, because I have to go look at my chart I made like a month ago, but pretty sure I computed out something like maybe at best case in a few years it contributes like 50 cents of earnings a year.
Yeah, I'm just talking about revenue. It's difficult to know what their costs look like right now or what they might look like long term. But I'm assuming long term on the ADAS package, they could have margins in the 60 to 70% range, given that the vast majority of the costs are fixed costs, and additional units beyond that should be marginally, accretive to earnings.
Machine, your mom replied in the replies, and please check your message from your mom. Alexander?
Yeah, Omar, do you know how many percent of the fleet in the US needs to subscribe to FSD for Tesla to make their first bill?
Well, Goldman estimates they did 1 to 3 billion last year. So, if you just assume, like, based on Troy's latest numbers that he published, 7% global take rate, and you do the math on how many cars they've delivered, and you just sort of multiply out the pricing, that alone will get you to $1 billion. So then, subscription, I think, will be a little bit additional on top of that, but hard to really know. I'm hoping that in this upcoming earnings report, we get much better detail into some of these things so that we can actually start to model this out. It's hard to really, say it's a material part of the business if they're not breaking it out. At the very least, I'm interested to get miles traveled and users. If they report users, that's a good sign, because it means users are probably growing. And for miles, the FSD miles tracker I have is showing over 2 billion miles, but that's probably over optimistic given that the last sort of rate of miles added was after the free trial. So it'll be interesting to see how many miles they report in the earnings release in 2 weeks and update that to see what level of usage we're actually seeing from the product now that the free trial period is over.
Machine.
Omar, how much do you imagine a fleet, if the whole fleet was subscribing to FSD as an ADAS system, on average, how much would they pay? People be willing to pay?
I think $99 is probably the sweet spot right now. If more functionality is added, like, for example, the ability to turn off the cabin camera on highways, uh, go to sleep or something like that, have smart summon, maybe people would pay a little more. But $99 right now is, I think, an okay price. $49 would probably be even better for roping people in. But I think even at $99, probably you can get a majority of users to subscribe.
Machine, I pinned your mom's message at the top. Your mom is trying to reach you now from 2 accounts in the replies. Please respond to your mom. Be respectful.
Mom, leave me alone. I'm just playing with my friends. And my friends are totally insane. They think the entire fleet would pay $100 a month for the software. And they need to go back to math class because these people can't afford $100 a month. Maybe some of them, the rich ones in their private schools and their elite San Francisco neighborhoods with their Teslas and their Model S's, maybe they can afford it, but not these Model 3, Model Y people.
Let me ask you in a more direct way. Omar, question for you. Is there any other software to which people subscribe on their cars in any sort of volume?
Yeah, OnStar, premium connectivity, various things from legacy auto companies, typically on high-end luxury cars.
And how much does OnStar cost?
I don't know, like $20 a month or something like that. There's also, Super Cruise, Dream Drive, things like that. But really, I mean, this thing just pays for itself. You don't have to subscribe for $99 a month. You can get a car with it. You can get a used car that has it. And it's not really going to cost that much more than a used car that you might buy that's, a Camry or something like that. So it's not that out of reach for people who want it. And it provides so much value, it almost pays for itself. If your time has any value at all, then it's kind of a no-brainer.
Yeah, so I'm looking at Automoblog. It says over 5 million subscribers for OnStar as of November 2023. And I think the cost is about $20, $30 a month. What do you get for OnStar?
Nothing, just some basic features. It calls for an emergency or something like that. But, when the moment's right, Tesla will just push it to every single car. So even if you don't pay $99 a month, you'll still just have it on your car. Just like Autopilot used to be a paid upgrade, it became part of the car. So there will be a free version of FSD that's included in every car. And it'll just drive straight and, go around cars, whatever. And then you'll be able to say, I don't know, pay for a 1-day pass if you wanted to actually follow the navigation, or you'll be able to, pay for maybe the trip or something like that. They'll charge your supercharger card on file. And then you'll have, at least some level of revenue coming in from different cars. Maybe even have like a free tier where they can use FSD for, let's say, 1 hour for free every month or something like that. And then you can charge them beyond that. They can sort of play with the pricing model that works, right? There's nothing stopping them from rolling it out to every car and starting to get users hooked onto it.
Alexander.
Yeah, so I bought FSD, and as you know, I'm in Sweden, so joke on me, haha. But they can't recognize that, right? Until I get FSD.
I think they recognize some of it, but the subscriptions they can recognize immediately. Jeff?
Yeah, thanks, Yaman. Appreciate you having me up. Question for Omar. I'm going to be driving my first substantial road trip between countries. I'm headed to Boise, Idaho from Texas, and wanted to I'm really looking forward to using the latest version of FSD 12.4.3. But Elon hasn't seen fit to download it to my car. So, Omar, could you text him and make sure that happens before Saturday morning?
Okay, yeah, sure. Why don't you tweet me and tag me, and I'll retweet you.
We don't tweet anymore, dude.
Oh, right. Why don't you X and tag me, and I'll retweet you. And maybe, and I think it does seem to be rolling out now pretty fast. So hopefully you'll get it. My other friend is also taking a road trip. Man, it's really great to have a road trip and have hands-free FSD. I was just doing it last night. I spent about 7 hours on FSD. I mean, it's like magic when you're just sitting there and it just does everything for you, goes around things, exits, pulls into the supercharger parking lot. It is, it's, even if you're broke, it's going to be really hard not to subscribe.
Yeah, imagine. You said something
pinned-
interesting I didn't quite understand. You said you have another friend. You have two?
Okay, I pinned in YouTube live chat a poll. We just subscribed to FST today at $49 a month. At $49 a month, we just subscribed to FST today. This poll is in YouTube live chat. Jan.
Oh, hello. My question is for Holmars. I have a friend who is a little bit bearish on FSD, and he has a pretty good reason because he says, how is FSD going to be able to differentiate between driving in Italy or Germany, because they have very different driving styles in those countries, or even I live in Amsterdam, and how is it going to know that bicycles are pretty much not going to stop for cars? So just wondering how you see that with the different driving cultures in Europe.
Yeah, it's an interesting point. I mean, when you look at human drivers, there's human drivers who are actually able to drive in multiple countries. You know, my dad's from Kashmir in India, and I went to India with him, and he was driving there was completely different compared to driving here. You know, he can drive in both places. And software is even going to be better than us in driving in both places. If you look at LLMs, for example, notice how they can translate between multiple languages, how they can understand things across cultures, understand little subtleties. Self-driving will be kind of like that, but even more advanced. Obviously, they're already training the current FSD 12 on drives from all over the world. So it's seeing all kinds of different driving behaviors, all kinds of different things that it needs to adapt to around the world. And it already works on all kinds of different cultures. They've given rides to people in Germany. It handles roundabouts there. It handles everything. It handles different parts of the culture. Obviously, I'm not claiming it does everything perfectly, but the model's able to adapt to where it is. And obviously, they have GPS, so they're able to know where they are and apply a different set of laws and regulations into the model and feed it different parameters on how to act based on what those regulations are. For example, in the United States, some states allow right turn on red, some states don't. So FSD gets fed this information in based on the GPS location, and right turn on red is turned on or off, different behaviors turned on or off, depending on the local rules and regulations. So, I think this is one thing people don't really appreciate. FSD is the first truly global self-driving system. There's self-driving companies in the United States, there's self-driving companies in China. Nobody else is actually building a system that works in the US, in China, and in Europe. And Tesla's the first one to do it. And from what I've heard from people who've tried it in Europe and in Asia, they're kind of blown away with how naturally it works in those markets too.
Sounds very reasonable. I'm just really interested to see some examples like in Amsterdam with the bicycles, or in Italy. I lived in Rome a long time ago, and there's a Via Cassia around Rome, and it's basically known for the fact that there's no driver on that road that follows the rules there. It's basically just yeah, you have to maybe if there's an Italian who drives on the Via Cassia who could tell us something about that.
Yeah, yesterday I was in this horrible traffic jam and there were cars coming from all these different directions and the lane lines were obscured and people weren't really following the rules. They were getting angry, they were doing crazy things. And FSD just kind of managed to get in the right place even when lanes were coming together, two cars were merging together. It just sort of did the right thing. I think they're kind of training more to physics and sort of the physics of not hitting people much more than sort of just staying within the lane lines as they sort of did in the past. This is much more advanced than what we've seen in the past. So
Yeah.
obviously Europe has a lot of challenges, but I'm sure we'll see some testing there when they release it.
Hey, Magic, we have a reply for you, and people are wondering if you're okay. You sounded a little stressed out earlier, and people want to make sure that your health is fine.
Yeah, I'm all right. This is a small part of my portfolio. Don't worry, I can double it down whenever I want. My question is, for anybody here, can you give me an example of a legitimate CEO calling out short sellers? Can anybody do that?
Uzi.
Alex Karp, i.e., I want to burn the shorts and take
Boom.
away the.
Elon Musk.
A Magic question for you. So Omar said earlier that at $99 per month, majority of Tesla owners will subscribe to FSD at some point. Omar, did you give a timeline to that?
To when the majority of users will subscribe, I think, probably before January 1st.
Magic, what do you think?
So what's the current take rate right now? I mean, we can all hypothesize about whatever we believe in the future, but what's the current take rate? Do we see an uptick?
Machine.
Well, I don't have an answer to that, but I think,
Well, if you don't have an answer to that for a second, so Magic, the specific question was, do you think majority of people will subscribe to it by the end of the year at $99 a month?
If I don't see a trend of an uptick, and I can't project, if it seems flat, so I don't have the data.
Okay, so are you saying no?
I say no. Yeah, unless some.
You guys want to do a coffee bet?
Yeah, sure.
Coffee bet. I'll type it up while machine rants.
Maybe let's call it a million users, because that's what they would probably be likely to kind of point out, maybe do a tweet or something like that.
Well, a million is way less than 50%. So since we have 6 million in the fleet worldwide,
well, we're only talking about the 2 million eligible vehicles, of course.
Well, that was 2 million. That was 2 million at the end of last year. So how many cars in US and Canada that have hardware 2.53 or above?
It's like 2 million going on probably 2.4 to 2.5 by the end of the year.
Magic, are you okay with 1 million cars?
Yeah, sure. I don't think that's gonna happen.
Okay.
So, yeah.
Okay, machine.
1 million FSD users.
Yep, 1 million FSD users. Machine.
Well, I just find it kind of insane to think that the majority of cars are going to subscribe for $100 a month. I don't know if you're aware, but there's like an incoming recession. People are barely paying for these vehicles as they are, as the prices keep going down, and you expect all of a sudden the surge of paying $100 a month for everyone. It's just crazy. And secondly, I just want to answer the part about how FSD is going to operate in other countries. I mean, it's pretty. It's not actually that complicated. The simplest one is you literally give a GPS indication of which country you're in, and the model, learning from data, will know how to drive. And the only complication there will be in Kashmir, because it's not actually going to know, is this part of India or Pakistan? It doesn't know how to classify it. Do I have to give Uber drives to terrorists or not? It's complicated.
Okay, I pinned at the top of your screens the Omar and Magic, would you please confirm that this wording is okay with you?
Waiting for it to load.
Okay, while we wait for it to load up top, I'm going to also pose this as a poll on YouTube live chat so you all can vote on it. And the previous poll was, we just subscribed to FST today at $49 a month. 72% said yes, 28% said no. I'm going to end that poll. We're going to do a new poll. Did it load yet?
I thought I said January.
Well, you said January 1.
Yeah.
So by December means by the end of December. So it's the same thing.
Oh, okay. Well,
Okay. Yeah, whenever we say buy in these bets, it's by the end of. Magic, you okay with this?
Yep.
Okay, Edward?
Yeah, what do you guys think the probability of them raising or lowering the FSD subscription? And if they would go either way, what would they raise or lower it to?
I mean, I don't think they really need to mess with the pricing that much. At this point, $99 is fine. We don't necessarily need everybody to sign up right away. People can sign up if they want it, if they're interested in it. And when the moment's right, it'll just be pre-installed on every car and we'll play with the pricing model. $99 a month is only $325 a day. For $325, your car can drive you around as much as you want. Okay, imagine if you're an Uber driver, right? You would say, hey, these are really low income guys. They're not going to pay $99 a month. Well, a piece of software that can do your entire job for you for $3 a day is worth it. Okay. You get to use this, you use your car every day, right? So, I mean, once you try it, it's going to be hard not to subscribe. You sit there, it does the drive for you. You don't even have to touch the wheel. And it does the entire thing. It's really nice.
Uzi.
I think part of the theory is that once driver attention is useless, then the entertainment platform can be built upon. So at that point, I think the FOMO will set in for people to, the adoption increases for people to take FSD. So, I mean, I don't want anyone to miss the boat again, but I think that's when we'll actually see FSD adoption really increase.
Neuralink presentation is live. I'm going to pin this at the top of our screens. If you want to go watch that instead, you may do so at the top of our screens. Yoda. Bogdan.
Yes, I think the way I think people are gonna adapt to the FSD is like, for example, parents knowing their kids driving horrible these days. So any smart people, and when they have money, they're just gonna subscribe on the kids' Tesla to make sure they're not gonna get an accident because they're gonna cost them even more. So the $100 might be a little bit too much, but they might come up with some family plans, something like that. But personally, I would definitely subscribe to my son Tesla. Thank you.
Danielle.
I mean, I'm gonna just underscore what Omar said. I was wondering how, Machine, do you not value your time at all? When you travel around, is it not worth a couple bucks to not have to focus on that? When you do an Uber drive, people pay 25 bucks. I really don't understand the logic how it's unimaginable that you would pay 100 bucks to get driven around all month. It's not that outrageous at all. You get so much time back.
It's not outrageous that some people pay for that, even 20%. It's outrageous to think the entire fleet will pay that. So we're talking about estimating the total
anyone's time
revenue.
is worth
No.
more.
We're talking about the total revenue across the whole fleet, trying to value the entire amount. You can't just say, oh, everyone's going to pay $100. That's absurd. That's an absurd, egregious assumption. You're trying to value this company logically with some probability models, and you're going with, yeah, everyone's gonna pay $100. That's what you're going with? That's reckless.
Omar.
Yeah, I'm not saying everyone's necessarily going to pay $100, but I'm starting with the assumption that in the future, almost nobody is going to drive themselves. It's very clear to me, right? The thing is starting to drive better than us, right? It can see things before we can. It can often take shortcuts and get places before we can. You're starting to realize, oh my God, this whole thing's flipping. Instead of, oh, I'm late, let me turn it off, it'll be, oh, I'm late, let me turn it on. Or, hey, I don't actually feel safe doing this long drive by myself, let me turn it on. So it's like, okay, this is really going to be something that is widespread. We're talking about hundreds of millions of people who are going to use this technology in their daily life. I've seen the future. So now the question becomes, okay, what price can you charge on average? What revenue can you generate? And there's different ways to sort of structure this, right? You just look at the sort of marginal cost of deployment. It's almost nothing. It's a little bit of bandwidth. Let's say it costs $1 to actually deploy it to a marginal car. All the costs are fixed. So you have a lot of flexibility on the pricing scheme. If the user is only willing to pay, $3, and you're not able to get anything else, you could come up with some pricing model that's able to satisfy that, like a per day or per trip price or something like that. So really you just want to start by asking, okay, what can I get people to pay? And there's different ways people have kind of structured this. Like with Microsoft, they have Windows and they said, okay, we got Windows XP Home and we've got Windows XP Pro. And if you want all these features, you can get the Pro. If you're someone who can't pay for the Pro, then you can get the Windows XP Standard. And that's going to be a little bit cheaper, but have less features. So that's kind of how I'm thinking about it. I'm not saying everybody is going to pay $99. I'm just starting from this realization, which you would also be able to see, I think, if you spent more time with the software, that this is going to be something that everybody wants to have on their car. Like, okay, everybody, not everybody, let's call it more than 90%.
Oh, more than 90%, Machine. Did you hear that? You better close out your short position on Tesla.
So if you just start to model this out and you say, okay, well, let's say I expect every car in the fleet to generate some FSD revenue. You start to kind of plug some numbers in there, and it looks like a huge business on its own. Forget about the actual sale of the cars, the energy business. Then you start to look at a scenario like licensing, and it can just get really crazy. There's no other product on the market that can quite do this. Self-driving, hands-free in the US, Europe, and China. So that potentially could be even bigger than what Tesla could do on their own cars. And that's, of course, before looking at Optimus, which is really too early to kind of value concretely. So if you just start looking at the expected value of FSD as an ADAS system, even before thinking about Tesla network and rideshare and taking a cut of the rides, and you start to try and build that in, it's clear that Tesla's undervalued if you kind of think about it from that perspective.
Machine.
I mean, that's where I think it's good to put some numbers to it. And so, for instance, just as an example, and you can argue about these numbers, if I assume pure profit here, so you can argue a higher revenue, $50 a month, pure profit on every car in a fleet. Let's say in a given year, 6 million cars. Okay, and obviously it's going to go up every year. This is assuming every car you're getting $50 a month. You're getting in pure profit a year about $3.5 billion, or basically $1 per share per year. If you assign a healthy multiple to that, let's say 50, and 50 is quite healthy. That's assuming 50% year-over-year growth, essentially. Then you're valuing that at $50. $50 for the stock price, which should be worth more. That's probably already somewhat embedded. So the FSD ADAS does add to the value of the company. You could argue $50 to $100.
Yeah, I got you. We got your point. Magic, how does it feel to not be the only bear on the board today?
I think Machine's making pretty valid points. I don't think it's bullish or bearish. I think he's thinking about it pretty logically.
Well, these are bearish points for sure. I mean, there's no question about that.
That is not. That is.
It is bearish.
That is insulting. A bear.
No,
the bears.
You're saying it's already embedded. You're saying it's already priced in the stock. Which bull says it's already priced in the stock?
Okay.
This is a bearish point. Stop being dishonest intellectually. Go ahead.
These bears think the stock itself should be worth $50. Okay, I'm saying you could value FSD as an ADAS system at maybe $50 a component. I didn't say this share price should be worth $50.
Okay, Lauren.
I'm arguing, how can you deny that some of this must be valued in, right? What is the value currently? How would you break down the valuation of Tesla right now into components?
Lauren.
Hey, I mostly come down closer to Omar on all this, but this conversation reminds me a lot of that Steve Ballmer clip where he was laughing it up at the iPhone when it first came out. Oh, who would ever pay $700 for a telephone? You got to be kidding me. I think we'll look back years from now, and Omar will be right. That virtually everyone will be paying for this service.
Don't scream into everybody's ear.
Oh, sorry.
Edward?
Yeah, I was wondering if you guys had any idea, because I was trying to work on a valuation for the subscription that Omar was talking about, to other licensing deals, and I was wondering, basically, what are the costs of Tesla to get the hardware and the software into other cars, and is it just going to be the new cars in manufacturing, let's say Ford, GM, whoever, and what is it going to take Tesla to do there?
Omar, do you want to also respond to Machine's point that it's already priced in the stock? Because if you assume 6 million cars pay $50 a month, you're looking at something like $3 billion annual profit for the 50 multiple on it. That's about $150 billion market cap. He says this is already priced in the stock.
Well, I think he's being a little too conservative. So, obviously, I think the average price per car is probably going to be closer to $100 than $50. So, you assume this can get deployed out worldwide, and let's call it, $6-7 billion of annual subscription revenue. Some people will obviously, pay in advance, but let's just assume it's all subscriptions. You multiply, $7 billion out by like 5 years. That's like, $35 billion of earnings over that period. And really, the most power doesn't come from the subscription itself, but by controlling the user, right? So think about the value of, for example, advertising. Hey, car, I want to go get a burger. Well, you can be at the top of the list for this price if this is something that 1 million people are using. So just looking at it and saying kind of, it's just going to be $50 forever, not accounting for the value per user going up over time, the subscription price probably going up over time, as well as other revenue sources. It's just a little bit conservative. I think if you really start to look at even Tesla's fleet, it is in the tens of billions of dollars of earnings that are going to come in over the next few years. And if you start to look at other automakers, then, Pandora's box just completely opens.
Digital and then Machine.
Hey, what's up, Tesla friends? I just want to say that I think that the full self-driving suite is actually, us paying for it is actually like a gift to Tesla. It's like buying a Roadster back in the day. And the cost of FSD is going to phase out over time. And this is a really tired argument that you guys are having about FSD. But I figured I'd throw that in there because if you're driving FSD, you're actually the one responsible for feeding the data to the machine that makes all of this stuff work. So it's foolish to be expected to pay.
Thank you. We're really focused on a specific topic right now. Machine.
Yeah, I don't even know what he just said.
I have no idea.
Tired argument about what?
Just go ahead.
So I don't disagree with Omar in terms of there's other opportunities there. I'm just pointing out it is a little bit conservative valuation. He's assuming $100 per month on every car in the world. Europe and China aren't going to pay as much as in the U.S. There's just other reasons to not assume that the current price is necessarily going to be the one going forward, that it might have to go down to accrue a very high percentage of the users. And I'm just giving you a point then, when you give a value to that, just putting some numbers to it, you get $50 to $100. I think $100, in share price valuation for FSD as an L2 is pretty optimistic. And it just points to, the top of the line added value to the stock, which people would probably be happy with. Like if the stock went up near $1 trillion and $100 of that was value to FST L2, I don't think people would be complaining. The point is just simply that the real money add for this company is Robotaxis and Optimus, not L2. The L2 is a nice thing. It's a margin boost.
Lauren.
Yeah, I'm of the opinion that if they can get this to work so it's really truly hands-free and you can, watch YouTube or play with your phone or something, not only is the revenue from the subscription going to be a big deal, but I think it's going to be a huge demand driver and really support margins, especially if some other company isn't soon to follow with a similar feature. I just can't imagine a scenario where it's not.
Omar?
So, the way I kind of think about this is, what's the average services revenue per car in the fleet every day? So if someone subscribes to FSD, they're paying like, $3 a day. So, maybe $1 a day globally, and maybe about 20 cents a day when you factor in that not everyone else is subscribing to FSD. So premium connectivity, all these different things, they're affecting the average services revenue per car globally, right? So as FSD is deployed globally, as you have the software improve, you have new functionality, eventually, with Robotaxi, that average revenue per car in the fleet is going to continue to increase. It's going to go from, I think, 20 cents to $1 a day, maybe $2, $3 a day. In a Robotaxi future where you have cars performing rides, it could potentially go to, $30 a day or $50 a day or $100 a day. So I see that, and how you sort of capture that value, how you generate that revenue and that the earnings from the fleet is neither here nor there. Whether it's for FSD or some other upgrade or whatever, it's just, sort of services revenue. So I see that actually growing considerably over time. Now it's nowhere. For the first time with hands-free FSD, we kind of have something that's actually pretty valuable, but that's only going to increase over time. Now, at the same time, the size of the fleet is actually increasing. So if you're able to sell these services, and they're fairly sticky services because people buy their cars and they use them every day and they want to keep using the service, then your earnings and your revenue are going to stay pretty constant, just automatic, right? You don't have to make any new cars. That revenue, it's really just going to come back next year. And then any additional units you make, any additional cars you add to the fleet is just growth on top of that. So it becomes really easy to deliver really consistent growth, especially when the average revenue generated per car is increasing as well. So that's the dynamic I really see playing out. And it's going to change the way that people really model Tesla. There will be a day in the future where people go, oh, production and deliveries came out. I forgot that was happening, because it'll be increasingly less and less material to the earnings. It'll be really fleet driven.
We have a good question in YouTube live chat from Tyler the Grand Machine. You're assuming $50 per month, but Tyler asks, what if it lowers your insurance if you run FSD to offset the subscription price, and now you're saving $200 a month? Go ahead.
Oh yeah, I mean, I think there's potential when it gets good enough for it to be worth more. I think that's getting to the range where it's near Robotaxi level, and when it's near Robotaxi level, it's not just about Robotaxis, but the value that it adds is very high. In this case, an example with insurance reduction, you're not getting insurance reduction if you're getting a critical disengagement every 1,000 miles, even though it's a great L2. You're going to reduce insurance if you're getting a critical disengagement or accident every 400,000 miles. Those are different.
Yeah, I don't think that you need that high level of performance to start seeing an improvement on the insurance. For example, the data shows even supervised FSD has 10 times less fatalities than when humans are driving themselves. So I think even in a supervised state, it's also already kind of proven its value. When it gets good enough that it can do this even unsupervised, then you would expect the crash performance to be even better because now it's not depending on the human. So yeah, I think today there's an insurance benefit. In the future, it'll eliminate the need to have insurance altogether. I think that'll just be included with the price of FSD.
Machine.
I'm sorry. If Tesla really believes that it's reduced accidents, fatalities, accidents, everything by 10x already, or let's say it's going to be 100x soon, right? Because Elon said the next version is 100x better. Then they should absolutely be essentially offering insurance for extremely low values, like $100 a year. So we should see that because Tesla would make money off of that, wouldn't they? So that should happen this year.
Yeah.
If you truly believe that.
Yeah, I mean, it happened last year. They give discounts based on safety score. So whether you're a good driver because you drove yourself or because you used FSD,
No.
they discount you.
Real price.
I mean, that
reduction.
is a price reduction. Your price goes down.
No, I'm talking real. I'm talking extremely low prices. You know that if you have a true 10x, 100x reduction in accident rate and injuries, then you can offer insurance for literally 5% of what it's costing right now. So show us.
Well,
they should show us.
No,
Show
I mean
me the money.
that logic doesn't follow. Obviously, this is still car insurance. The cost of offering car insurance has gone up. Repairing a car that's been in a crash is expensive. You can give them a discount if they use FSD, but they're not forced to use FSD. They can do whatever they want with the car. They could be parked on the side of the road and a truck can hit the car. To throw out some arbitrary number like $100 and say it needs to be $100 is not, it doesn't really make any sense. They are offering discounts, but that doesn't change the fundamental cost of insurance as it exists today.
Machine.
Yes, it does. You can just break it out. You're going to pay this much for what percent of miles you drive by yourself, and this rate for the amount of miles or percentage that you drive. Supervised FSD. This is not that complicated.
Well, I think
so Machine, why? So you agree? You argue on one hand that Tesla will get to 99% of drives no critical disengagement, and then on the other hand, you're providing sports that FSD is not getting to a level where it's going to reduce accidents by 5x, 10x. Go ahead.
Yeah, I can explain this, and this is where having really good math skills comes in hand, and that's why I'm here to educate the space continuously.
Get to your
confusing arguments. FSD. Let me explain. FSD getting to 99.9% drives without a critical disengagement would be very good, but that is actually still below human level. Ergo, the insurance rate would still not be lower than human. Even though it's gotten better, still worse than a human.
We're going to go to a bull and then another bear. Noah and then Magic.
Yeah, we were just driving on FSD and it stops like hard at yellow lights. Whose fault is that? Is that Nitsa's or Tesla's?
Magic.
Hey, I think Omar just said that the insurance business is going to be obsolete in the future. I just that seems kind of like a really bold statement. Secondly, I agree
No,
with
that's not what I said. I said the insurance would be priced into the cost of FSD.
Yeah, I don't think the insurance business is going away, or I don't know how it's priced, but it's going to be pretty standard. And I
I
agree
didn't
with
say that the insurance business was going away. I said the insurance would be included in the cost of FSD. You won't have to go buy your own personal car insurance.
Yeah, and I agree with Machine. And like, if it's so much safer, then why don't insurers offer it cheaper? Because it's less risky to price the insurance. But the insurers don't believe that. Tesla doesn't believe that either, because they don't offer lower than market, lower than Progressive, lower than Geico insurance. So they don't even believe in their own products to give you the lower price on the insurance.
Well, they do actually give you a discount if you use FSD more.
Right. Exactly. The FSD miles count as 100 safety score, right, Omar?
Yeah, correct.
Yeah, and that dramatically obviously reduces. The more you use FSD in the states where it's available, the lower your insurance payments. I mean, I think everyone knows this at this point. Magic, Machine, Joey.
Yeah, so you guys are saying, I don't know what the multiple is, it's 10 times safer than a human driver, then the insurance should be approximately 10 times less than a human.
Nobody's saying that right now. No one's saying that.
So that's what I'm saying, is it should be proportionate in the amount of risk that you guys are saying it's decreasing. If it's decreasing risk, then it should decrease the cost, but we're not saying that.
Well,
Yes,
it is
but
decreasing the cost. It is
let me make a
decreasing the
real quick.
cost. No, you have to raise your hand and wait your turn like everybody else. I don't know why people think they're more important than others. Machine.
Yeah, I mean, the proof is in the pudding. Let me just summarize. When the actual accident rate on FSD or intervention rate is truly really low, it will show up in extremely low insurance prices. Okay. And another topic I just want to raise, by the way, in terms of the price movement, have you noticed Rivian is up the same amount in the last week? What has Rivian done? What is the market valuing Rivian's future earnings?
We're sticking for FSD right now, and then we're gonna switch to Rivian after. Let's go to Edward, then Joey, then Jimmy.
Yeah, I have a direct response to the insurance thing. I literally just called 3 different insurance agents trying to insure my son on my wife's old Model 3, okay, the standard. And they gave me crazy rates for him, and their justification, because I was giving them all the safety features, but their justification, all of them were Teslas were targets for people vandalizing and stuff like that, other things that the people are more likely to do damage to a Tesla than a Chevrolet sitting on the side of the road. And they literally told me that, all 3 of them.
Okay, Joey.
Yeah, I just wanted to make a clarification that the safety score doesn't impact insurance rates, and I sent the snippet in the chat.
Where are you at? Which state are you?
California.
Yeah, California.
That's only in California.
Yeah. Yeah, Joey, I wish you came every day. I wish you didn't leave the space for a year and then started coming when the stock going up, because you would have known the answer to that. Jimmy.
Yeah, so the thing with insurance, Tesla insurance versus normal car insurance, the reason why your normal car insurance from like an Allstate, whatever Progressive might be higher, it's because they don't understand Teslas and they don't understand how much a Tesla costs to repair. And so what you can actually do is you can find Teslas that maybe have like a fender bender, and the insurance company, rather than getting a bid from Tesla to fix it, they just zero the car out and say, oh, yep, it's totaled. And that's why your premiums are so high. And it's not just because of you as the individual user, it's because when you look at it, insurance companies, they based off the total of people who are under that plan. Now, if you have 1 million people with Teslas, And the common thing is these Teslas are getting damaged or they're getting in accidents, and then they're getting quotes back from Tesla, really the only person who can work on the cars, and they're coming in high. The insurance companies are like, every time a Tesla gets hurt, just total it out. And let's make sure our premiums are up higher. When you're driving with Tesla insurance under FSD, your rates go lower over time. Plus, Tesla knows how to fix their own vehicles and they have parts on hand.
Fantastic. Neo.
Yeah, I was just going to add one data point to the insurance conversation. I was recently quoted $235 a month by Travelers, and then I switched to Tesla insurance, and they start you off at a 90 safety score, and for me, that was $240 a month. And then since I drive all my miles on FSD, I have a score of, well, currently it's a score of 98, but previously it was a 100. And when it was at 100, it was 154 a month. So it was about a $90 per month decrease in cost.
So FSD paid for itself.
Yeah, there you go. How many states is it available right now, Omar?
12, I think.
Yeah. Yeah, I mean, it's been kind of surprising. It's still not in Florida, right? And it's not in New York.
Yeah, it just kind of stopped at some point. I think they're losing money on it. So that's probably why they didn't want to expand it further.
Yeah, maybe I guess that makes sense. Cyberbull. And I think pricing risk is a tough business. It seems easy, and you would think that Tesla would have an advantage because they have all the direct data coming out of cars, but it is a tough business. It's been proven time and again, even by companies who've been around for 100 years. But I think they'll figure it out eventually.
Yeah, I mean,
Cyberbull?
it has the potential to be really huge as they improve FSD because you can price for risk, but then also drive down the risk with your software.
Yeah, it's a perfect. I mean, it's a perfect feedback loop, basically. I'm looking forward to it. I wish Elon talked more about Tesla insurance and maybe what the challenges are, where he sees it going, because I agree, it's a huge business. It has a lot of potential, very profitable. TAM is huge, and Tesla has a unique advantage on so many fronts. Yoda.
Yeah, I think for Tesla insurance to provide variable rates at the individual level, they have to first collect a bunch of data on the fleet to train a model that can predict. Once they have that, I believe that they, when a new owner comes on board, they just need to, track how you drive for a certain number of miles before they could just predict what kind of driver you are from a risk perspective.
Well, we have a good question in YouTube live chat from Kevin King. Kevin asks, is there a way to get an estimated Tesla insurance quote prior to buying a Tesla, or is it available only after purchase?
I think you need to order and get a VIN before you can get a quote. But yeah, I think that's what they said.
Yeah, I guess Tesla could make it available based on estimates, estimated miles of drive, or whichever car you're going to order, right? Why didn't they do that?
Yeah, it might be helpful for people to see, but for some reason they haven't done that.
Complexity.
Yeah, if you guys are fine, then we had some news on the battery front today as well.
All right, let's make sure we're done with this topic. Is any of the comments, questions on Tesla insurance? Please request to speak. Complexity.
Yeah, so today the White House approved Chile's request to have them listed as an IRA beneficiary. So basically, any lithium coming out of Chile will now qualify to the battery sourcing requirements, which are going forth from 2025 to 32. So that will allow any battery that comes from Chile or any lithium that is coming from Chile to be 100% compliant, and it will receive the 7,500 tax credit if it is if it is in a EV.
Okay. Is
Other
there a Tesla model that uses Chilean batteries?
So we have two suppliers in Argentina currently isn't compliant with the IRA, but now the manufacturers could potentially route their shipments through Chile, and that would qualify them to a 7,500 credit rate.
Okay, thank you. Omar, what do you think about that?
Sorry, I was reading some tweets. What did he say?
He said that Chilean suppliers of batteries are now approved for IRA credits. So to the extent
Oh,
that any of our
that's huge.
suppliers are not qualified, they can route their shipments through Chile.
Yeah, that's a big deal.
Okay. Stefan.
Chile has a lot of minerals that are helpful for batteries. They're really concentrated in a few countries, and Chile's one of them. So that's pretty good news.
Complexity.
Yeah. So I just had a.
Yeah. So the deal is actually limited to lithium only. But another point of the deal that I was reading was that the pricing difference between Chinese batteries and batteries in North America is due to the difference in prices and everything, in labor as well. But now that Chile and Argentina have relatively benefiting from the IRA itself, so we would see lower prices on batteries starting in 2026, when approximately we would have 10 new mines go up in both the countries. And currently, there are approximately 110 proposals for lithium mines to be approved in Chile as well.
Thank you. Stefan.
Are we still on the insurance topic?
Yeah, go ahead.
Yeah, so I just had a quick comment. So a friend of mine, she owns a Tesla Model 3, long range down in San Diego. We were going out for dinner. All of a sudden, she get a notification. We just literally walking down the block. She gets a notification on her phone. Somebody rear-ended her. So anyway, she got his insurance information, but she was really frustrated because Tesla Insurance wouldn't return her call. She left several messages and to coordinate with the other insurance company, and so it was a very frustrating process for her. Just FYI, as a comment, as an anecdote that Tesla probably needs
Yeah, you're
to
not
do.
really supposed to call them to file a claim. You're supposed to just go in the app and do it through there.
Yeah.
We're getting some background noise from you, so we're going to move on. Thank you. When people come up to speaker board, they should make sure that they're, as prepared with their phones, eating, as when you're going to an interview. Okay, don't come up here disrespecting the rest of the space. All right, Omar, let's switch topics. So you posted earlier today that the Tesla bulls have PTSD and they're not bullish enough. Would you like to elaborate on that?
Yeah, well, first I just wanted to say that 75% of the world's lithium deposits are in Chile, Argentina, and Bolivia. So it may not sound like a big deal. Okay, lithium prices, lithium imports allowed from Chile that qualify. But it is actually a big deal because there's a lot of lithium there. Like most of the lithium on the planet is in those three countries. So this is going to bring down US battery prices, which is good news. So yeah, I think basically, and it's not necessarily a bad thing, but people are just being cautious. After a 3-year downtrend, people are battered and beaten, and they're a little bit afraid to be bullish, even when something bullish is happening. They're saying, I don't know, it looks kind of bullish, but the economy could also collapse or something. I don't know, you know, and I think people are a little bit muted in some of their reactions because of that. I think actually the institutions are the ones who are actually identifying that this is a bullish situation and jumping in. A lot of the retail investors are still feeling pretty cautious. And I think if the stock continues to climb, that'll change. Eventually, people will be less afraid to be bullish. Then people will start to get too bullish again. And then the cycle will repeat.
Okay. So you expect Tesla bulls to become more bullish with people who are skeptical about adding more here or going all in, buying call options, or any sort of like a all in type of mentality. I mean, I do sense what you're sensing too, that there is definitely some skepticism among the bulls. I think there are some people who came in the last few weeks with the momentum that built up. Some new investors, I see it in this space. I see it on YouTube. I see it in the comments, in the replies. Some people with short-term mentality, trading mentality, but the long timers appear to be a bit more skeptical this time around. What do you think is
Yeah.
driving that specifically?
Just recency bias, right? The stock hasn't been doing well. People were burned and embarrassed by their bullish predictions. When the stock then just collapsed, everyone laughed at them. They pointed and they laughed and they said, "You're stupid." So they don't want to just jump out and be stupid again, even if, something bullish is actually happening. It seems like most people don't really, I think, understand what's happening in the business, that they've really brought out this really game changing product, a low cost EV that can drive itself. And it's really starting to feel like a robotaxi now, right? And you can bring machine up and it'll say, well, the data suggests it needs to da 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 da. It feels like a robotaxi. You get in, you turn it on. Like I'd be comfortable even just getting in the back seat within this gated community and letting me drive around for a bit. Like it is getting to that level where it is, I mean, they're unveiling the cyber cab in a month. And people are a little bit slow, I think, to accept what's actually happening. It's been such a long time. They have been, subdued their expectations so many times that they're a little cautious. They're like, well, no, maybe this isn't really it. This is just sort of a false start. It's going to come crashing back down any day now. And then there also seem to be some people who are a little upset. Some people who really sort of pushed the narrative that Tesla is, in this horrible position. The business is suffering. Elon is hurting the brand and they need to advertise and this and that. And look, the stock price is showing that I'm right. And then to see the stock price go up for, some of these people, I think are a little bit upset. They feel like, it kind of invalidates what they were saying maybe. So it is kind of an interesting situation.
Let,
I
let me
think
ask you something. Do you think that some people are feeling betrayed by the tens of billions of dollars of share sales by the CEO?
um not at this moment more than usual. I think definitely people do bring that up a lot, but I don't think at this moment people are thinking about it more than usual.
Okay. All right. Well, the stock is rising again today. I think this is the 11th day in a row, up 1.5%. In the last month, up 53%. From the bottom on April 22nd, up about 90+%, almost doubled. Joey, what's on your mind?
I'm just enjoying the ride and hearing everybody's opinions.
Okay. Where do you think the stock is headed next?
I think 371 up to Robotaxi event.
How'd you come up with that such a specific number?
The Meet Kevin video. There's a good video of him breaking down the momentum.
Okay. Can you tell us maybe the highlights?
Yeah, he said that there's gonna be more of a battle before the earnings, and then after the earnings, that's when the hype and momentum and bullish catalyst basically will take over, and then about a week before the setup will be that it'll consolidate, and then probably a sell to news on Robotaxi day.
Yeah, I mean, he actually shorted Tesla for a little bit earlier, and he made some money on it, I think, bought some put options and sold them, made a bit of money, and then went long, right? What's his current long position in Tesla? Do you know?
I'm not sure, but I think he's net long now for sure.
Well, I don't think he can go short on ZTF, but maybe I'll pull it up and see what it is. Yeah, I mean, how crazy would it be if this kept going up every single day until late day, right?
Yeah, it's a good time to be long.
Yeah, Omar, do you think that's possible?
I think that it is sinful to look at the stock price and enjoy the gains. I think we should all center ourselves. The stock is obviously going much higher over time. I believe that. I think it's going to be the most valuable company in public markets. And there'll be ups and downs. It's going to go up. It's going to go down. There will be a nasty correction at some point, following this, and then maybe it'll go up more. Or then maybe it'll go down. It's impossible to predict. The predictions themselves change what happens in the market. So I'm hoping for the best. I'm prepared for the worst. And I'm enjoying the ride. I mean, the vindication does kind of feel nice, right? You kind of feel like an insane person when the stock's going down and everyone's telling you this company's a disaster, just kind of trying to gaslight you. And you're sitting in the car and you're saying, I see it with my own eyes and ears, but everybody's saying this. So it is good to kind of see some validation, but I think we should not expect it to go up every day. We should be prepared for some tough corrections.
I was just looking at Meet Kevin pricing power ETF, according to Yahoo Finance, top 10 holdings. Number 1, Tesla. You have to stay on mute and raise your hand and wait to be called upon. Number 1, Tesla, 15%. Apple, 11%. Amazon, 10%. And then it goes long. So Tesla is 60% of Meet Kevin's ETF today. Wait, Magic.
Hey, I posted a chart that shows that Tesla's RSI, which is the relative strength index, is at the highest level I think ever recorded for the stock. Pretty much it measures how overbought a stock is. So just something to consider.
Chef.
Yeah, I posted a couple of times on your account there on X, and just to let you know what my feeling is, because I posted a couple of times on your account there on X, and just to let you know what my feeling is, because I'm pretty much a a day trader by heart, but I do have the long term on Tesla. I'm still in my all in at 138.50. I still own 2,000 shares, and I'm not getting rid of it for anything. I'll hold this especially for next week. There's a lot of people piling in on the 275s. Somebody went in and bought 29,000 calls for 275. The volume's just picking up, and I think where a lot of people will get kind of hurt a little bit is on the 8.8 when they release that. If you buy the next week's, if you go into the next week's options chain, you'll see that there are a lot more people piling in after the release. Probably just to see that if the release goes down or if it goes up, but the call volume there is also off the charts. So for me, I look at it as I'll ride those shares forever, but I'll trade it. And right now, next week looks pretty good. I'm definitely still sticking to my little prediction that I have it at 270 by next week. But it looks like I'm getting blown away. It may actually happen by the end of this week. So, yeah, I'm pretty happy about it.
Thank you, Jeff. Thank you, Chef. Chef, I actually looked through your profile, and you don't have any chef pictures. No pictures of your food.
Yeah, I post some. I don't post most of everything I do because I have so many pictures and so many clients that I have that I know that want to be on my feed. But every once in a while, I throw out a couple of different things. But I do get requests for a lot of it, believe it or not. And I'm going to do more. I do my YouTube page. I do a lot with the Tesla anyway, because that's kind of like my passion is there besides cooking. But I will post some more. You'll see it.
Okay, good. All right. At the top of your screens is a coffee bet between Omar and Magic. Please reply to that bet and let them know whose side you're on. And Magic, by the way, I think I was reviewing, I don't know if you saw that space I had last night doing reviews of coffee bets. And I think I want to bet against you.
Can you pull it up? Not sure which one.
Yeah, I'll pull it up. Oh, our favorite guy is here. Let's bring him up if he's available. Our favorite bear is in the house. Omar, you know who I'm talking about?
Gordon Johnson?
No, Machine.
Oh.
It is Gordon Johnson. If he's available, but that's okay if not. Magic, do you still think Tesla's cash balance will drop below 10 billion?
By the end of the year, yes. Well, I'm not sure I don't remember what the date was on the bet. I think it was 1 year.
Yeah. Gordon, how are you?
Good. How are you?
I'm good. How do you feel about Tesla stock these days now that it's doubled in the last few weeks?
What's changed?
Well, I'm just asking you how you feel about the stock price surging.
Well, the stock price surging, I think, is, we see these every now and then where you have these this options activity and this options manipulation, what I think is manipulation. I think that's what's going on here.
Gordon, I had a bunch of questions before whether you actually short Tesla stock or not. Do you actually short Tesla stock?
Yeah, as I've said before in these rooms, I'm not getting into my positions.
Okay, that's fine. To the question, what changed? I guess one answer is, there was some uncertainty around whether Elon was going to stay or not. Some people have been started selling shares. Some of the, social media characters, for example, paper handed 20% of their shares. And now that uncertainty is off the table, do you think that might be propelling the stock a little bit?
I think that's a good point. That's definitely a point that's been mentioned on Twitter. But I think for institutional investors who understand this stock, the idea that Elon Musk was ever going to leave Tesla was always a ridiculous idea. Elon Musk uses Tesla, in our view, as his own personal piggy bank. And you can see that with a number of things he's done with respect to, buying Solar City, um, you know, um, investments in his other interrelated companies, buying Twitter, etc. So the idea that he was going to leave Tesla, which clearly would cause a significant drop in Tesla stock on the headline alone, was always a joke. If his deal didn't get passed, in our view, there was 0% a 0% likelihood he would leave Tesla. And if the judge determines somehow that the deal is not going to go through, there's still a 0% chance he's going to leave Tesla. Um, so that was always a joke. I think institutional people know that. I know it was a big story on Twitter, but I think there's a lot of stories on Twitter that aren't necessarily worthy of real attention.
What do you think about the Tesla Energy results? That was a little surprising to many people. I don't think anyone expected Tesla to have installed that many gigawatt hours of mega packs. And what do you think that's going to do to the quarterly financial statements that's going to be announced in a couple of weeks here?
Yeah, I mean, we'll see. I haven't published my model yet, so I'm not going to get into any numbers. But the question is, I cover solar very closely. And within the solar space right now, prices are in a state of free fall. In the storage space, there's a lot of competition. In short, China in 2023 was 50% of global solar installations. The US was around 7%. So as goes China, as goes the rest of the global solar industry. The point is, we don't know. First of all, assuming prices are stable, anybody can do this math. You can just look at what the ASP per watt was last quarter, and you can see that from a revenue recognition standpoint, assuming prices are stable, you're still going to have roughly 90% of revenues coming from auto sales. But prices weren't stable, and you can see that you can look at what SolarEdge has said recently with respect to their storage division, or you can look at the California Solar Initiative data that comes out periodically. The most recent data came out about 2 weeks ago. So, it's these narratives that people jump on to try to justify moves in the stock. But I think the other thing that's important is, the delivery number, to start this year, the expectation on Q2 deliveries was about 550,000 cars. And the number came down to, a level that, Tesla was able to beat, but still down year over year. Yet the stock is now higher than when it was to start this year. So I think that's one dynamic that's very important. And the other dynamic that I think a lot of people have wrong is, I don't even know if you guys have talked about this, is the rate buy downs and what that does to the financials. I don't know if you guys care about that, but I think that's very important.
Okay. Well, let's get Yoda's views on that real quick. Yoda, any questions or comments on what Gordon said so far?
Sorry, I just logged in.
Omar, what about you?
Yeah, I mean, Gordon, do you have any estimate on what the impact on financials might be from the financing incentives they offered in the second quarter?
Yes, but I won't go through that. But here's how the math works. So it's interesting that even a number of Tesla bears are using accounting that mirrors if a company has a captive financing arm. And given Tesla does not have a captive financing arm, IRS rule ASC 606 is what's applicable here, and specifically step 3 of 5, which means for the rates they brought down, that will have a direct effect on ASP, and thus a direct effect on gross margin, net margin, and cash flow. I know that in the US, they do not have a captive financing arm. And they haven't disclosed that they have a captive financing arm in China, but theoretically, they could be financing it off balance sheet in China. I have no idea what they're doing there. But I think that when you model it like you, for instance, when you model it like you would model if GM financed a loan, it's basically amortized over a number of years and the immediate impact is inconsequential. That's the incorrect way to model it when you're modeling Tesla. So I think that people are going to be potentially surprised at the impact that these rate buy downs have had. The way the math works is very simple. You can just go to Google and pull up an interest rate calculator. And you can, in the US, I think the minimum down payment was $4,250. You take a $40,000 car, you assume a 6.5% rate normal, right? They're using 0.99. You take the differential of that and you get roughly, a cost to Tesla of $5,000 per car on these deals. So depending on the volume of deals they did, given it's a direct hit to revenues and gross margins, and given, their profit per car is roughly $4,500, not only are the cars they're doing under these deals, one could argue not profitable, but it could potentially be a significant hit depending on the volume of deals they did to the Q2 financials and clearly the Q3 financials.
Okay, so but you're not willing to share your gross margin estimates yet for Q2, right?
No, they haven't been published.
Yeah, and then when they're published, would you please come up here and share your estimate? Because it's really hard to kind of talk about these relative terms and not be able to kind of mention any specific numbers. Like one thing, for example, you're kind of leaving out is the fact that in Q1, Tesla used to offer very substantial discounts on the new inventory page, which disappeared in Q2 and instead became these financing offers. So it may net out to be kind of similar, right, Gordon?
Yeah, exactly. Again, I can't stress this enough. The way the math works is in the US, for the deals they finance, the discount is roughly $5,000 per car. That's substantially above any price discounts they offered. And again, because they don't have a captive financing arm, this is a direct hit to their financials up front.
All right, Omar.
And yeah, I just add, even the smart bears I talked to were modeling this as of yesterday as if Tesla had a captive financing arm when they don't.
Omar.
Yeah, I think it'll be interesting to see how they do handle it. So there'll be a lot to pour over there in the earnings release and the 10Q. But I think there's a chance that it could actually have less of an impact than the inventory discounts they did in the first quarter. Obviously, with the financing incentive they offered, it's only to a specific region, the United States. It's only within a specific model, the Model Y. It was only, I think, for a 1 month period where you had to order. And then it was only for qualifying buyers. Buyers who chose to pay in cash or lease obviously weren't affected. Some buyers with bad credit didn't qualify. So we're really talking about a pretty limited number of people who took advantage of that
Let
incentive.
me just correct you. That's 100% incorrect. They offered 0% financing in China for the entire month of June, and they also offered financing deals in Europe.
Yeah, I think 0% interest, 0% down. But in both cases, I think a more limited scope
Yeah, but you just
than the
incorrectly
inventory
said it was
discounts they
just the
did.
U.S. You just incorrectly said it was just the U.S., and that's incorrect. They offered 0% financing for 5 years in China, and that was all of June, and they've extended that through July. And they offered financing deals in Europe, a number of different European countries. So it wasn't just the U.S., just to be clear.
Yeah, that's right. They did also offer it in China as well.
One other thing that I would highlight, the 444 number, apparently Tesla sold 20,000 cars in a fleet sale to the Chinese government in a one-time fleet sale. So the point is, it looks like the run rate of sales is around 420, not 444. So you could actually get, assuming they don't offer incremental discounts. Also keep in mind, right, in Europe, they've just hiked prices to offset the tariffs that took effect. 30.8% on top of the existing 10% tariff. So you're talking about a 40% total tariff. So Tesla just hiked prices in a number of European countries to offset the tariff. So you also had demand pulling in Europe in Q2 associated with the tariffs that took effect in Q3. So it looks like the actual number in Q3 could potentially be worse than the number and significantly worse than Q2, assuming they don't have additional discounts.
Thank you. Robert? Any questions for Gordon Johnson, please request to speak. Robert, you're on mute. You have to unmute yourself for us to hear you. Bull 2035, anything else? Anything from you?
Hey, Gordon, thanks for coming. I appreciate how you talk numbers. Is there one thing that you would tell a Tesla bull that you think is the biggest thing that Tesla bulls miss or overlook when they're looking at Tesla?
I mean, there's so many things Tesla bulls miss and overlook. Yeah, I would just say, for some of these people who are viewed as experts and are often on TV, I would say go back and look at what they said a year ago. So, for instance, the thesis on Tesla a year ago from the smartest bulls I know was, and it's been the thesis for a while, was in 2030, Tesla's going to be selling 20 million cars a year. They're going to dominate the EV space. There is no such thing as competition. There is no Tesla killer. Tesla's going to dominate, right? That was the thesis. And that's why Tesla had this crazy valuation. What I see is crazy valuation, right? Now you have a company that's seeing 2 consecutive quarters of negative year-over-year growth, and they're going to do less than 2 million, likely do less than 2 million cars this year. All of this we've published. This isn't anything new. We can do likely less than 2 million cars this year. So they're already seeing negative growth, and they're nowhere near 20 million EVs sold per year. So it looks like that thesis has been completely thrown out of the window. And now it's a robot and Robotaxi company. By the way, Elon Musk has been promising Robotaxis next year since like 2016. They don't have LiDAR. Anybody who's been successful in this space has LiDAR. The people who have Robotaxis on the road right now are losing gobs of money. Waymo loses what, like $2 billion a year. So the idea that there's going to be no competition and they're going to dominate the robot in Robotaxi space is the same thesis that they were going to dominate the EV space, which I think has now been put to rest. So I just think it just keeps migrating to this kind of far out, 5 to 10 year out view. And at some point, fundamentals are going to be important. At some point, institutional investors are going to say, why am I paying 100 times earnings for a company whose earnings are declining? So I think that that's something to focus on if you're a Tesla bull.
Machine.
Well, Gordon, I don't know if you've caught the recent narrative from even the respected Tesla bulls like Rob Maurer, who said deliveries don't matter anymore. The only thing that matters is Robotaxi. How do you respond to that sort of sentiment?
Yeah, I mean, you kind of have to say that, right? Again, like Rob Maurer, that's what I mean. Like, go back and look at what Rob Maurer was saying a year ago, 2 years ago, 3 years ago, right? He was saying Tesla's going to dominate the EV space. They're going to sell 20 million EVs a year. And, every car on the road is going to be a Tesla, right? You can't really say that anymore because you've now had 2 consecutive quarters of negative year-over-year growth, right? The whole idea that they're going to make this $25,000 car has been completely squashed, right? Like that was the bull case for years. And then, they were going to, have this, stamping function. And it's just, it's like me covering McDonald's and saying McDonald's is going to dominate the I don't know, the shoe space. They're going to make tennis shoes and they're going to dominate, even though they generate no revenue from tennis shoes, right? I mean, it's a bad analogy, but you understand what I'm saying. The point is, the story keeps shifting while the fundamentals deteriorate. And I've covered enough companies, and it's easy to say, hey, it's went from 150 to 260, you're wrong. But I cover a solar company. I don't want to say the name of it, but the stock was 180 like a month ago, got all the way up to 450, and in 2 weeks dropped back down to 180. Like these, unfortunately, in this market, these type of things happen. But fundamentals are important. Numbers are important, and Tesla's actual numbers are getting worse. The fantastical stories
We have
are
a
getting
bunch of
better,
hands.
but the numbers
Okay,
are getting worse.
got it. Edward, Omar, the machine.
Yeah, Gordon, I was just wondering if you think that Robotaxi will materialize, if so, or if not, and what year you think so, and if any other OEM will ever license that from Tesla.
Yeah, so I mean, we've said this many times, published and on TV. We don't think so. This is just a fact, right? So every company that's successfully doing Robotaxi right now uses LiDAR and radar. Tesla uses neither, right? If you look at the Tesla FSDtracker.com, the quote unquote FSD vaporware that they're selling is getting worse, not better. So I can't say it'll never happen. The problem is Elon Musk, right, has said that all of the cars that he has on the road have the hardware necessary to be robotaxis. So if he shifts that and then has to retrofit all of the cars with LiDAR to truly make them robotaxis, that could be a big problem potentially from a class action lawsuit perspective. But our view is, and let me just, let me be clear. I'm not an expert in robotaxis, but we speak to the experts. And the people who are experts in this space will tell you, without LiDAR, you are never going to achieve robotaxis. And that's been their stance for years. So unless they implement LiDAR, I don't think they're ever going to hit robotaxi. And I think you can see that in, just this isn't even hard.
Okay.
Just pull up
All right.
YouTube and look at a video.
Got it. Omar, then machine.
Yeah, I don't think that the auto business doesn't matter in 2023 and in 2024 so far. Tesla was the #1 producer of BEVs in the world. Looking forward to the third quarter, we've got an easy comp with last year. And I think they're going to have a record third quarter. They're going to post a year-over-year sales increase. They're going to post a year-over-year earnings increase. And the sort of argument that bears have been thumping the table on is going to start to fade into the rearview mirror.
One other question, Gordon. I wonder if you could comment on where you think interest rates and inflation are going, since it seems to be cooling a bit and there's increasing odds for a rate cut. I was curious your thoughts on that. And then, I wanted to ask again, and I think this happened last time. Keep saying you have experts who are telling you about LiDAR, and I really would like to know who these experts are. And I know you're going to tell me you can't say, but it's hard for us to take that seriously, almost as seriously as I take this Euro Cup Netherlands England game. I saw other fans that all look very ugly. I mean, two ugly populations, and I'm totally distracted.
Yeah. So with respect to when you say experts and you want me to reveal my sources, I don't know if you guys know how research works, but no one's going to reveal their sources to you. That will compromise not only their sources, but their ability to get information from those sources. I don't know if you guys understand that, but I thought that was pretty well understood. Maybe not. With respect to interest rates, that's a great question, because I think one of the key drivers of Tesla stock and the stock market writ large, if you follow me on Twitter, is the printing of money by the Federal Reserve. And I don't think it's interest rates that are driving things. And it's actually quite simple to explain this. At the beginning of this year, the expectation was that the Fed was going to cut rates 6 times. At one point, I think over the past 2 months, that number, or 3 months, that number had dropped all the way down to 1. So it went from 7 rate cut expectations to 1. Yet the stock market was substantially higher. So it's not, in my view, rates that are driving the market. It's money printing. And the Fed prints money in a lot of different ways. Like, for instance, I was talking to somebody about this today, but like in 2020, the Fed reduced. Hold on, yeah. So it was in early 2020, the Fed exempted U.S. Treasury bonds from the supplemental leverage ratio for banks. So what that did is it effectively, in a fell swoop, freed up money for the banks to go out and basically buy risk assets. You know, when Silicon Valley Bank failed, the Fed bailed them out. Um, you know, and all of these things were enabled by, you know, a wartime act that Trump implemented during COVID, which basically gave the Fed unfettered power to basically do whatever they want. So the biggest risk, in my view, to the bear thesis on Tesla is that the Fed continues to print money unfettered and stocks just continue to melt up, which, you know, if everything
Okay.
melts up, even with bad fundamentals, Tesla will. So that's my
Thank
answer
you.
to that.
Yoda.
Yeah, Gordon, I have kind of 5 questions to ask you. And these are just yes or no's. And it's a bit of history because I've been investing since 2016. So the first question is, did you believe Tesla would complete Gigafactory Nevada and start mass battery production back in 2016? And maybe I'll just read them all.
I didn't cover Tesla in 2016.
Yeah. Did you think Tesla would ramp up Model 3 production and make EVs affordable by 2017? Did you believe
I didn't cover
Tesla
Tesla in 2017 either.
did you believe Tesla would have its Shanghai Gigafactory operational by 2019?
All right, let me stop you there. Here's what I believe. I believe that COVID caused a parts shortage and Tesla skirted rules to have cars available when no one else did. And that caused their operating margins to go from 2% to 20%. There's no longer a parts shortage. So Tesla's operating margins have went from 19% to 5.5%. Tesla's fundamentals are in a state of free fall. They burnt $2.5 billion in free cash flow last quarter. And we're on record saying they're going to burn again this quarter. Like, I know you guys only look at stock price and you back into these theories, but the way that investing works is you project out how much cash a company is going to generate, and then you discount that cash back to the present. The reason when Holmar says Tesla makes the most BEVs, it's because everybody's exiting the BEV space. Why? Because they lose money making BEVs, just like Tesla did in 1Q. That's not something to tout as a positive. The reason why Ford and GM and Mercedes and Ferrari and every other car company is significantly scaling back their BEV plans is because they lose money making them. So
Doesn't that
if
speak to
Tesla
Tesla's
is burning
competitive
cash,
advantage?
it doesn't matter what they've done historically. What matters is what they're going to do going forward. And their fundamentals have collapsed over the past 4 to 5
Gordon,
quarters.
we have a question for you in the replies. Machine's mom asks, why is Xpeng dropping LiDAR, Gordon?
I'm sorry?
Why is Xpeng, the Chinese automaker, dropping LiDAR in their new vehicle?
Right, probably because they're burning a lot of money and they're trying to reduce costs to stay alive.
Okay, thank you. And thank you, Machine's mom, for the question. Danny.
And for last night.
Yes, thank you. So we see how much better GPT-3 to 4 has gotten. More data, bigger model, requires more hardware. What do you think hardware 5, which will be able to fit 5x the parameter count, or even more? Imagine a much better hardware that can fit a really large model. How do you think that will do, Gordon?
What? I'm sorry, I didn't catch that.
GPT-3 to 4 was a big jump. Now imagine FSD, current version, big jump, like much bigger AI model running on hardware 5 or better. What kind of improvement do you think that would make?
I don't even know what you're talking about. I'm
Yeah,
sorry.
Gordon.
What are you
So
asking me?
let me just ask that. Thank you, Danny. Elon has indicated the next version, hardware 4, is going to be able to handle a 5x to 10x increase in parameters, which in previous AI models, AI topics, has led to a significant increase in performance of the AI model. And would you change your view on the stock if FSD all of a sudden became much more effective, much better,
Well, I'm looking at
99.99%
Tesla. I'm looking at
reliability?
Tesla FSD tracker right
That's what I'm
now,
saying.
and
So
it's
if on
becoming.
TeslaFSDTracker.com, for example, if you started seeing 1,000 plus miles between disengagement, would you change your view on the stock?
Hold on. So I'm looking at FSD tracker right now, and it's actually getting worse. I'm just looking at it right now.
Okay, but the
Percent of
question
drives
is,
with no
if
critical
that
disengagement.
increases, the question is, if that increases to 1,000 miles between interventions, would you change your view?
How much money does Wamo make selling FSD or robotaxis?
Okay, so you're saying, in other words, because Waymo doesn't make any money, even if Tesla got there, you wouldn't.
I'm asking you a question. You guys ask me questions. Let me ask you one. Who
But
makes
you didn't
money
answer the
selling?
question.
There's robotaxis operational today. What company is profitable in that business right now? I can tell you that Google, who owns Wamo, they're burning $2 billion a year in that business. It's a huge cash pit. The only reason they're able to operate that business is because they have a massively profitable, advertising side of the business. So with Tesla, whose core business is in a state of disarray, right? How are they going to operate robotaxis burning $2 billion a year when their core business is also burning money? I guess that's my question to you.
Okay, Omar?
Well, the cost structure of Tesla's solution is vastly different than Waymo's. So I think just like in the EV market, they're the only ones who can do it profitably. I think that's going to be true with autonomous
But they
as
don't
well.
have a solution. There's not one Tesla robotaxi on the road today. So how can you say what their cost structure is when the business does not even exist?
Well, you can see in the cars, they do our drives for us. You can see the performance. Pretty much the same car without major
Hold on.
changes to
What are you
cost
talking
structure.
about? Seriously, like, what are you talking about? Like, what you're saying is like conjecture and vagary. Like when you say when they do the drives, like what are you even talking about? That's not a robotaxi business. That's you putting your car on lane assist and letting it drive you. You're not making any money doing that. Like you're not even like seriously, what are you talking about? They don't have a robotaxi business. They don't have one robotaxi on the road. So for you to say the cost structure is lower is, for lack of a better word, ridiculous.
Well, they're designing a solution where any ordinary car can run the software. And you can take any ordinary car and you can turn on FSD and you can run the software today. So you can see that. And another important point, you're talking about TeslaFSDTracker.com. There's a major new version rolling out right now, Tesla FSD 12.4, that goes hands-free. It's a big update, way better in miles per intervention. That's not yet in the tracker. So the data you're looking at is kind of rearward facing. To really look at the performance, you'd want to look at FSD 12.4 compared to FSD 12.3, not FSD 12.3 compared to 12.3. And of course, that tracker is just based off random
Homars,
people submitting data.
You've been saying this since FSD 1.0. I mean, are you serious? Like, come on, man.
Been saying what? What have I been saying?
By the way, is there any truth to the rumor that Tesla has specifically made the routes for Elon Musk and highly visible influencers? They focused on those routes more than others. Are you aware of that, Homars? Are you one of the ones that they've focused on making your route easier when you do the videos for FSD? Is that accurate or no?
Well, there's not just one route. I mean, anyone can go get a Tesla and try it for themselves.
No, Homars, let me be very clear. Has Tesla specifically focused on your routes to make your routes better when you use FSD? Is somebody alleged that? I think it was, I don't want to say who it is because I don't remember who it was, but is that accurate? Did they do that?
No, it's not accurate. I mean, there's not just one route that I use. And like I said, you can go rent a Tesla. Anyone can go rent a Tesla and try the route on any route they wanted. I just gave Machine a ride. I let him pick his own routes that I didn't even know about. and it did the drives without any intervention. So I would just encourage you to go try it out for yourself, and you'll see what the performance is actually like. It's not fake, like some people want to
So
claim.
Holmars, you're
It's
saying
real.
you've never worked with Tesla directly to show them your routes to improve your route performance when you
No.
do videos?
No, never.
Okay,
Okay.
Yoda.
Gordon, I'm just curious, with your Tesla short position, are you all in on this, or do you have other positions that diversify?
He doesn't. Yoda. He doesn't. He said he doesn't discuss his personal. Come on, machine.
You know, Omar did give me a ride, and I thought I was choosing new routes, but in reality, there was a Tesla employee in the back seat who kept whispering in my ear, telling me which place to pick. And I thought it was a little weird, but I didn't think anything of it until, Gordon, you just made me realize they were probably trying to make me pick certain routes.
Okay, Finflexity. Machine, are you eating chicken Popeyes? Are you eating Popeyes again?
Sorry, I was having some.
You are eating Popeyes, aren't you? Finflexity.
Yeah, I would just like to say to Gordon that he is making wildly stupid assumptions that the Fed is printing money. In fact, the Fed has been in quantitative tightening since 2022. So that means that they have been shrinking the size of their balance sheet and not increasing it. Hence, they are trying to pull money out of markets, yet the whole market is still rising. So your basic of what is happening and why it is causation of that is wrong.
Cryo.
Thank you. Super simple question, Gordon. I appreciate your time here. What is the latest version of FSD that you have personally driven? I've heard you call it vaporware for years now, but which version have you driven, and how much have you tried of that personally yourself?
Hey, I'll just say real quick, and then I got to run to the last guy who said that the Fed's balance sheet is dropping. It's not just the Fed's balance sheet that you have to look at. You need to look at the reverse repo account that sits on the Fed's balance sheet, which was money created during quantitative QE infinity. So from 2000 to 2022, they put roughly $2 trillion of newly printed money into the reverse repo account as a buffer. And you have to look at the Treasury General account balance, which is what Janet Yellen uses to provide liquidity to markets. You have to add those three things up to look at what total liquidity in the U.S. is. And when you do that, you'll see that there has been absolutely no quantitative tightening done. Number one. And then number two, with respect to that other question, I got to run, guys. And thanks for having me. Bye.
Thanks for coming, Gordon.
Yeah. That was very good. It's always very informative when he's in here. I really enjoy his presence. I know some people in the replies don't like it, but deal with it. The only decision you have to make is whether you want to be in the space or not. And all bears, all bulls, everybody is welcome. I don't block anybody, and we have great discussions because of it, I think. Machine.
Well, I was going to suggest to Gordon before he left, I think he should make a trip out to San Francisco, and Omar can offer him a ride in the FSD car.
I offered him. He said he's scared.
And on one condition, the condition is that you guys pick me up and we all go to Popeyes, enjoy a meal.
That someone would be a funny video. You, me, and Gordon Johnson in the car.
Yeah, that would be amazing. Frosty in the reply says, Popeye's chicken, so I believe, Machine. Machine, riding with Omar didn't change your view. Why would it change Gordon's view?
I mean, again, you have these false equivalencies between different people, including myself. I don't think I'm like Gordon in terms of what I think FSD can do or what it's capable of. He's got a fundamental idea that this thing is not, can't even really drive, that needs LiDAR. And so I think there's a bigger delta between reality and his perception than mine. Mine is correct.
He actually dodged the question, why Expon? It's very good. He dodged that question. I expected better from Gordon on that one. Inflexity.
Yeah, not to mention that him hiding his expert is, highly irregular, especially in respect to Wall Street analysts. Analysts at Goldman Sachs, BofA, whenever they write their reports, they literally put the whole transcript of the interview that they have with the expert with the name and their qualification completely in the report itself, and he is not even ready to say what his expert's qualifications are.
Yeah, okay, but he did give you a good answer on liquidity, right? Right?
Yeah, he did give a good answer on that one, but he was specifically talking about the Fed's quantitative easing of the economy, and I was just pointing out that the Fed alone is in a quantitative tightening state right now.
Yeah, but you could also just point to the fact that Fed's balance sheet today is much larger than a few years ago. So
Yeah,
there's
definitely.
still, yeah. Omar.
Yeah, I think the other interesting part about that was he kind of admitted that if rates come down, then his Tesla price target could be completely off. It could continue to go up. And, I think even Machine admitted that he believes a pure vision robotaxi should be possible. So whoever his experts are, I don't think they're very smart.
Edward.
Yeah, I think personally the biggest mistake that Gordon makes in his thinking is that he's not understanding how vertically integrated Tesla is. When he says that the other companies aren't making money on EVs, yeah, because they're paying $100 for a $50 part, where Tesla's just making the $50 part for 40.
10 more minutes to go. 10-minute warning. Inflexity.
Yeah, the point of the Fed's balance sheet actually reminded me that Bank of America today came out and they basically said that last week was the largest net inflow to equities. So it was the fifth largest inflow to the markets since around 2008. So the consumer discretionary got like 2.17 or 2.13 billion in net inflows, which was basically equivalent to the technology sector. And the majority of inflows were with respect to Tesla only.
Machine.
Have you guys discussed Rivian at all?
No. God, those Rivian bulls are something else. Like they literally think and the reason why the stock is down, why the resale values are sinking, why the company can't turn a profit. They're like taking it out on me. I'm like, I didn't do it, dude. Like it's literally your poor management. Why are you coming after me? But anyway, they bring in engagement. I appreciate that. Thanks for the fist. Machine.
Well, I think I'm not speaking about them Rivian independently here. I'm trying to give context of describing the Tesla price movement as in this is just the market realizing.
Well, Tesla did go up
ability.
multiple times more than many other stocks. So.
Well, I mean, just for instance, in the last week, I mean, obviously it has, but like in the last week, the price movement, Tesla's up about 12-13%, and so is Rivian. So there's clearly some part of this is movement into, I don't know, EV stocks.
Yeah, maybe. Omar?
Yeah.
Yeah, I don't think you can really make that kind of statement. A lot of trading these days is just sort of algorithmic, and just by nature of Tesla going up, there's probably going to be like a Rivian sympathy trade. There's probably going to be some bots. People have like Chat GPT running and they go, here's the list of some of the top stocks that are performing today. What are some, trade ideas that are similar? Oh, Tesla's up. Rivian's also a stock. But in Rivian's case, I don't think it's actually supported by fundamentals. I think their fundamentals continue to be pretty poor. They're running up against the wall on their cash burn, trying to ramp up R2, and they have to make some pretty big investments to actually get that vehicle program off the ground.
I just looked. The great Lucid is up even more in the last 5 days. So
you made the same point a million times. We get it. There's some correlation between these EV stocks. You're not making any original points. You're not making any original points.
My original point is that those stocks are going to go back down. Lucid's going to go back down. So part of this is there's going to be a little bit of a rug pull.
Yeah, I think a lot of people agree with you. Humanities.
Yeah, somebody took my question, but I find it interesting that Gordon left conveniently when asked if he had experienced full self-driving himself. I think it's a really important question. Next time he's on, I hope we
No,
could get that.
I think that question is an irrelevant question. Data speaks for itself.
Yeah. Well, he's
Data
managing a lot of people's
speaks
money.
for itself. Data speaks for itself. I couldn't care less if Gordon has driven FSD or not. So that's not a question I'm going to ask him. And other people have asked the question more than once today to him, which I don't appreciate. And many people ask the same question in the replies, which I still don't appreciate. I think it's irrelevant. I think it just goes to show some people don't understand how to read and respect data. Inflexibility.
Yeah, just wanted to say that a large part of why the EV makers are up together, so because of Tesla's meteoric rise within the first few days of July. So that obviously what Oma said about algorithmic trading is a big factor because Tesla had very high volumes for the first few days. Then after that, there was a net inflow into consumer discretionary ETFs and more specifically for the automobile sector ETFs as well. So that would trigger a equal rise for all automakers almost.
Okay, thank you. Omar, would you like to finish us off?
Yeah, I think pretty much any time Tesla has a rally like this, you're probably going to see other EV stocks rally in sympathy as well. That doesn't mean that the Tesla rally isn't justified or that it's just some sort of the same situation as Rivian or Lucid. I also think that as the market has come to a consensus that rates may be coming down this year, possibly as early as September, that would materially improve the situation for Rivian and Lucid in terms of their sales. So that could be factoring in as well.
All right. Well, we went over a few minutes today. Thank you very much, everybody, for your patience and for being here with us. All bulls out, bears are welcome in this space. We appreciate all of you. This is a very diverse group, and I really, really love that about Tesla Live. Thank you for joining, and I'll talk to you guys tomorrow. Take care.